Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so daily chart, and on a relative basis, we have been consolidating with the occasional hiccup now since, call it mid-May. I'm going to zoom this in one. So the last two sessions, so you got Friday here and Thursday, both of these sessions interacted with the 9-day. What you've seen in the big push late Friday into Sunday night, now Monday morning, is you've seen a higher high. It's engaging now with the upper band. The high from back on June the 8th was 32.3125. We've traded as high as 04 quarter today. If they can convert the round number 3,200 to support, then the natural place to head up to is to go ahead and test that June 8th high. See if that continues to be resistance or if that's something they can push through and get up and go. So if you're a short, if you're the bears, what do? Well, first of all, stop throwing darts at highs because you keep getting run over. Okay, that's one. Number two is you've got to see if this tape can convert anything to resistance on a multi-day basis. We're back to that. And to the extent that it can't, it's going to continue to bleed to the upside. In a vacuum, this thing wants to go higher. Look, the numbers from Florida are terrible, Texas terrible, Arizona terrible, California terrible. I mean, it's all terrible. But what we've seen is a similar thing that we saw with the numbers way back with New York and New Jersey. Numbers come out, and 3 or 4 weeks ago, it really shocked the tape. We're back in here. You get some decent down moves. Now those numbers are pushing the tape down, but those dips are just being bought. So as the tape gets conditioned to what's happening in a vacuum, this market, like most markets, almost all markets, wants to go higher. You can agree with it, disagree with it. You can say that the fundamental case is this, or the geopolitical case is this, or the epidemiological case is this. None of that really matters. What matters is price. The short side always makes a lot more sense than the long side. Okay? The long side is really only about the market going up. The economy is improving, but it's coming from a place where it can do nothing but improve. What I would suggest to all of you is get out of your head. Stop worrying about what's happening out there and understand what's happening on the chart and the chart of most underlying stocks, which is, look, these dips are getting bought. Don't fight price. Don't fight the tape. When the bears show that they can handle things on a multi-day basis, at that point, you can get some pretty decent pull-ins for a few days. But when it reaches these larger areas, here, the decision has been to take it higher. And until the bears can act a little better, a lot better, and act much more consistently when it comes time for them to execute at key inflection points, this is just going to keep happening. So, hourly chart. Here's your hourly midband. It hasn't really been engaged overnight. It came back into the 9-day on Friday before the open. They did a dip, right in that early, that 10 o'clock period of time. It was a pretty straightforward day for us on Friday. We didn't trade a bunch. We just, we had a really nice short down into 36s, and then we bought that, and then we ended up getting long 65 half up into the close. I covered it into the weekend because I always do, and this is one of those ones where you wish you'd held it. We didn't mess with it last night. I just wasn't around to trade, and I was not up at 5 o'clock in the morning when this thing headed back in towards the hourly midband. But you see here, 04, 02, 03, 04 is the deal. That's your last pre-FOMC print. We've made it all the way back to that at 31.96 half. Round number 3,200 is going to be important. You've got volume weighted average price is locked up with our proprietary moving average at 92.75. So if you get a bigger push down this morning, there's a chance to go ahead and engage that area. But unless the bears behave differently, the engagements with these areas may chop a little bit, but ultimately they're going to get bought, and they're going to get bled back to new highs. So the best thing that the bears can do for themselves today is to try to close this sucker below the hourly midband. I'm not even going to go there with weekly pivot, which is down at 31.56 a quarter. That's the new one to start. It's the weekly pivot for this week. I think that's going to take a couple of days, even if the bears are behaving well. I would be pretty mindful in the next 2 sessions of a move back to here that holds. I think if you get a move back to the weekly pivot early in the week that holds, I think the bulls really do take advantage of the late week directional days into the weekend, unless you get a piece of news that's really going to hold it down. That's always the X factor, but that's in any tape. So be careful fighting price. Respect the fact that this thing wants to buy dips and go higher. And you can still be short from time to time, but when you are, you need to take profits and understand that you're counter trend. And the potential for this thing to really rise from here is there simply because it may not look it on a relative basis, but we've been consolidating for the next leg. Bottom line. And if that leg wants to be up and it deals with this high back here, then it can really stretch from here. You can do another 100 handles. All right. Everybody have a fantastic day. We'll have some more stuff out on social. Check that out. Be safe. Be healthy. Take care. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.